Good morning and welcome back to the Broadcast Retirement Network's BRN Sunday podcast. I'm Jeff Snyder, your host for the next 60 minutes, and we're going to be talking to members of academia, financial services, and the media and analyze all the news in retirement markets, technology, personal finance, and so much more. We've got another great show for you this week. Our contributors are gearing up for a great conversation, so sit back and relax and enjoy this episode of the BRN Sunday podcast. Well, let's kick things off with a look at financial markets. That seems to be the thing that people are really focused on today, as well as paychecks and paying for all their bills. So joining me on the line, he's the co-founder of Delphi Digital, a cryptocurrency research firm, but he also in previous life served as an equity strategist. And his name, Kevin Kelly. Hey, Kevin, how are you?
Doing well, Jeff. How about yourself?
Doing okay, all things considered. It's a rainy Friday here in Jersey City. How's it in your neck of the woods?
Same thing over here. Makes me feel a little less FOMO that it's not sunny outside. I'm not out there, but
yeah, absolutely. So, Kevin, I want to jump right in because so many Americans, as I said in the lead-in, are really focused on watching the markets each and every day. I mean, they're home, they're not working. Some people have been furloughed. Some people lost their jobs completely. Some people are working. But we just got unemployment numbers. The unemployment rate jumps to 14.7%. Unbelievable number, not since the Great Depression. But why don't you break it down for us? Let's get into the brass tacks here.
Yeah, it's quite a shocking number to say the least. I don't think anybody expected we'd be here, at the start of this year, but here we are. I mean, the U.S. lost some 20 million jobs in April, right, and basically erased a lot of the job gains we've seen over this past decade. You mentioned the unemployment rate. I think also there's the potential for another wave of layoffs as we kind of get towards the end of this month and have to see again, when the world starts to really be able to reopen on a large scale. And I just think, the more you look at the data, the more you look at how even states and countries that have started to try and open up earlier or arguably even prematurely, a lot of even the demand or the traffic or the activity around some of these countries and states is certainly well below pre-COVID levels, right? So this is one of the things that we've been talking about a lot, and that a lot of people have expected this V-shaped recovery, and from the onset, it just seemed like it was very far from what the reality was going to be. And I think, hearing these numbers, this week and then the expectations for unemployment going forward, I think that V-shaped recovery seems, all but impossible at this point. Just because, again, you have a lot of kind of Main Street small businesses that are continuing to struggle, potentially haven't gotten the funding that they need. I saw a survey this week that looked at small businesses, and again, I think the survey was only about 400 of them, or a little less than that, but something like 52% of them said that over the next 6 months they expect to close, I think even with or without change. And so when you hear numbers like that, I think the underlying economic damage certainly can't be overstated, because you see this huge disconnect between what's happening in markets. And you look at like a large cap index like the S&P 500, and we've gotten this question a ton recently. How is it that the market can not be, making new highs, but have rebounded or recovered so drastically, even though you have this deterioration, to say the least, in economic data. It's just important to understand that the stock market is not, a full or real-time representation of the underlying economic situation. I think you're seeing that dichotomy play out, in spades right now.
Yeah, and I was going to ask you that because, to your point, I think we had gotten down to like the 18,000 or 19,000 level in the Dow Jones Industrial Average, and that seems to be where a lot of people, that's often reported, kind of measures the sentiment in the market. But now we're up to 24,000, so we've actually returned to where we were, and it does kind of send that message like, okay, we were buoyed a little bit. And, in terms of the stimulus, we can argue whether or not everyone's getting the money they need. I think we'd all agree that it's never going to get to everyone exactly when it needs to be. And you are going to see shuttered businesses. But it just is interesting to see, is that stimulus money what's circulating and keeping things where it is? Is is the market becoming more like responding like this because businesses are that are still open are more efficient? I mean, how do you take all that and try to rationalize it?
Yeah. To be honest, I think one of the really important disclaimers or clarifications to make is that if you take the S&P 500, for example, that is by definition an equity index that looks at, US large cap stocks, right? And if you actually look at the concentration, so if you look at the top five companies within the S&P, their market caps and what that represents for the index at large, Microsoft, Apple, Amazon, Alphabet, and Facebook represent over 20% of the S&P 500 alone. And if you think about the companies, especially you take Amazon's a really kind of low-hanging fruit here, what this has created is a ton of dispersion in terms of the winners and losers out of all of this, right? So anybody who's kind of tied to physical capital or locations, you think about, restaurants, hospitality, anything that has to do with leisure, those, companies and stocks have certainly sold off quite a bit. But then you look at somebody like Amazon, it's on the total flip side where, they're thriving, they're actually increasing headcount, they're reinvesting back in their business to capture more market share. So I think, a general trend that's going to come out of this, and it ties back into the small business aspect, is I think you're going to see an increase or an acceleration in industry consolidation, because the tough reality today is that the companies that sit closest to Washington, or the companies that sit closest to the money, are the ones who are going to survive. And a lot of these large kind of incumbents, think about an Amazon, smaller firms simply just can't compete with that, right? And so they're going to capture more market share. And I think, longer term, this could accelerate some of the rhetoric or regulatory rhetoric around, breaking up some of these firms, certainly. But I just think, by and large, what this has done is on the flip side, has exposed a lot of companies that were maybe zombie companies that didn't have the highest quality balance sheets or took on a ton of debt and just simply weren't going to survive. And you needed some type of event like this to kind of flush them out. But what it also unfortunately does is it creates this really difficult game of, if you can get access to the funding, you might have a great business and a great business model and things were going really well. And if you don't have access to capital, there's not a whole lot you can do. It's almost, out of your hands. I think it's an exogenous shock to your business.
Yeah, I want to just say, this is my own personal opinion. I find it abhorrent, and I'll use that word. I think it, when it comes to this I was going to say Pension Protection Act, but I mean Payroll Protection Program, and the disaster relief that the SBA was administering. I just find it abhorrent that we're talking about endowments, right? There was a big blow up a couple of weeks ago about Harvard and colleges that really have these huge endowments getting stimulus, or some of these organizations that, in my mind, look, they have other ways to draw capital. They can borrow, but they're getting, this money was meant for small businesses. There are thousands upon thousands of small, and I'm not going to stand on my soapbox. I think there are a lot of people that agree with me that maybe don't want to say it, but it's not my position to advocate. But I do find it kind of odd that, this money, the spigot was opened, the money where it was supposed to go, and it didn't all get to where it needs to be. Maybe a little bit of it trickled off, but that to me is the biggest problem. And it really is it almost has that Lehman-esque feel where, we're determining, these people in Washington, D.C. are determining winners and losers. And that really bothers me, as you can tell.
No, I know. I'm right there with you. I'll put my flag in the ground right next to yours, because I certainly agree. And you think about things like, the Treasury creating a vehicle in which, the Fed can essentially finance the purchasing of, high yield, junk speculative debt. It almost creates, I think what this is going to create too, you've got the industry acceleration trend or consolidation trend. I think what it also does is it increases the moral hazard of some of these large companies, right? If you're sitting there and you've just taken on a ton of leverage and a ton of debt, and you're essentially getting bailed out, and I don't use that word lightly because I think that word has been overused, but there are certain situations where it's applicable. You're essentially getting bailed out by the government. The moral hazard of running again a company with a quality balance sheet and going back to just basic fundamentals. I think also the moral hazard aspect also gets worse after this, right? And it trickles down, to your point, all the way to not only small businesses, but you think about things like income inequality, right? And if you have these incumbents that survive and they gain more market share and they gain more market power, you don't have the unions of the heyday. You don't have the average employee. The average employee's kind of power or influence today is certainly greatly diminished. You only kind of exacerbate the potential income inequality gap that we know has been widening because the people who have access to capital and access to these assets is just a vastly different world than, your kind of average employee. And especially now where you have so many small businesses going under, how many people are going to be, I think there's some stat around the amount of small businesses. A large portion of those are actually just kind of sole proprietorships, right? Or one or two, person shops or doing something, out of your own home. How many people are going to be forced to go back to work, for some type of corporation or for some larger organization, and will kind of give up on that entrepreneurial or startup dream because they, to your point, were left out of these stimulus in quotes packages that came along. How many of them are going to be, basically deterred away from doing that or chasing, some type of dream like that because they simply just can't trust or don't have confidence that this won't happen again.
I agree. I mean, we got off topic a little bit in terms of markets, but I think
it's an important one, though.
It's something that it needs to be looked at, I think, and is going to have an impact. And this is why the unemployment rate is at X, the 14.7% jobs are being, and why businesses can't afford, in a lot of cases, to keep people, and why you could see more unemployment. And it's not a good thing. So, look, we're going to leave it there. We're going to try to be positive here, and that's what we try to do. We're trying to think about the long term, and we will recover. But again, there's a lot of unintended consequences as a result of actions a lot of things that are out of our control. Kevin, always great talking with you, and I know you have a big week next week with the blockchain conference, right? Is that going to be doing that virtually?
Yeah, we've got a few lined up next week. We've got a big Bitcoin halving event that some people are talking about now, basically just where Bitcoin's issuance rate gets cut in half, happens about every 4 years. So there's been a lot of kind of inbound inquiry, just people wondering, what Bitcoin is, especially given the current macro backdrop that we've talked about. Certainly a perfect storm kind of setting up here for Bitcoin and crypto going forward. So we're excited about it.
Yeah, absolutely. Well, Kevin, always great talking with you. Thanks for the interesting insight, and we'll talk to you again next week.
That's a great job. Have a good one.
Welcome back. Now time to talk about tech. Joining me on the line, and his voice is almost gone. He has been so busy for the week on his own show, and he graces us with his presence. Mr. Daniel Klein, Senior Technology and Consumer Products Reporter with The Motley Fool, and he's sipping on tea. Dan, how are you doing?
I'm actually drinking coffee, and I wonder if we should change my intro because so much of my life is now doing Motley Fool Live that I almost define myself more as host of Motley Fool Live.
Okay, then we'll say that.
I mean, I'm kidding a little bit. I still do all the other things. Once this pandemic ends, I'll probably have to make some choices. But right now, there's just nothing else to do. So working 12 hours a day is the way to go.
Yeah, absolutely. And so let's dive right in. There are a couple of stories I know you want to talk about, but let's start off with Facebook. Really interesting story here. We have talked about Facebook for the last 2 years, you and I and Natalie Walters and your colleagues at Motley Fool. But they are appointing almost like a Supreme Court or a board to oversee content. What can you tell us here, Dan?
Yeah, it's basically an independent board that is going to decide what content meets their standards. So are they going to flag me? No, probably not. But when Alex Jones or President Trump or whoever else it might be, Michael Moore, just to pick figures on both sides of the aisle, if they post something and that's flagged as not being truthful, this 30-member board is going to take a look at it and rule on it. It sort of takes Facebook out of the position of saying, and look, it's uncomfortable for Facebook to say the president is lying and this shouldn't be here. This takes that decision out of their hands, and it's a very smart move by the company. It just basically gives them some cover, but also, I mean, I don't know if you've seen it in your Facebook feed, but there's been a fake documentary that's been circulating about the pandemic, and it's been widely discredited. And all of my conspiracy theory, I'll call them friends, but really people I went to high school with, are up in arms. Why is this being taken down? Why did YouTube take it down? There's a conspiracy. And the reality is it's been taken down because it's full of lies, and it's been widely discredited. So this gives Facebook a mechanism where it's not Mark Zuckerberg saying, hey, look, I'm taking this down. This is an independent body. And of course, that's not going to stop, and I hate to be political, but it's largely been political. That's not going to stop people on the right from screaming conspiracy theory, but it is going to give Facebook some cover.
Yeah, so I'm interested to know who is on this board, who these people are, their backgrounds, who's fun, who supports them, those kind of things. Because when I kind of look, I get really nervous when people start arbitrating, whether it's Facebook or Twitter or anybody starts arbitrating what is or isn't true and how they do their research and all those kind of things. That kind of makes me just generally nervous, even when it comes to like investment things. So let's bring it back to retirement. Who's to say that an investment philosophy isn't correct, or that kind of makes me nervous. So who are these individuals that have you done some research on that?
Yeah, they've only named a few, but one of the first ones is Denmark's first female prime minister. The second one is a Nobel Peace Prize laureate from Yemen. 5 Americans are on the board, including former federal judge Michael McConnell and constitutional law expert Jamal Green. This is a very independent, distinguished board, and there's 30 people on it. This is not really an attempt to censor. This is an attempt to enforce the policies Facebook has had about the truth and advancing conspiracy theories. It's about making it a better product. And let's all remember, Facebook is a public business, but they're public in that their stock is traded. They're not owned by the government. You have no right to post on Facebook.
Sure.
So people are going to scream free speech. You don't have the free speech to yell out fire in a movie theater. And advancing a conspiracy theory on Facebook or some political lie, or a lie of some other things, baby food is a plot to control us. Who knows what it is? And this is a group that's designed to cut that down. Are they going to be able to get all of it? No, but can they get it at the highest level and say, okay, this thing that's been circulated 40,000 times, has no basis in fact, let's get rid of it. There's a lot of fear mongering. It is not a great idea. Let's say I post on Facebook today, there will be no meat available at any grocery store for the next 90 days, and that catches fire. Well, that's not true. So that should come down. And one of the things they can also do is sort of start ferreting out what's a legitimate news source and what is a made-up news source. There are lots of news sources that I don't agree with that are opinion-based, but that are still somewhat following news procedure. There's also a lot that are just absolutely not real and saying whatever they want without any sort of reporting or basis. This group can start to dig into that and really just make Facebook a better place for everybody.
Yeah, I want to, I don't use Facebook. I don't even have a Facebook page. I've never used it. I tend to focus on like LinkedIn and focus my efforts there because I appreciate that that's more of a professional business site. I think there's a lot of crap, and I'll just say that it's a non-technical term, a lot of crap on those social networks that, if you're, and I want to bring it back to digital marketing. I almost called you Devin because I was thinking about LinkedIn, but I think from a social marketing perspective, there's so much clutter on Twitter, Instagram. I don't know how, if you're a marketer, you can even rely on those, what is being put out there and how the impressions. There's a jumble of junk as far as I'm concerned.
So I don't know Instagram all that well. I have an Instagram only to communicate with some younger friends that are only on Instagram. Twitter, I view as a platform to follow my colleagues and my favorite comedians. There is some advertising. I don't see how it possibly works. Facebook, where I used to be somewhat political, I'm pretty much never political because you're not convincing anybody on the other side to even think in any way. So Facebook is where I post pictures of my cats. Occasionally, I post an article I've written if it's something I think would be of general interest. And I post, kind of funny things. Like yesterday, I posted, "This is the golden age for off-brand paper towels." And that got about, 30 or 40 comments because we've all been forced to buy paper towels that are brands we've never heard of. So I picture that like Bronny is like rolling in dough and he's wearing a tuxedo and a monocle now. And so I have fun on Facebook. That said, there are a lot of people that I've muted for 30 days because they're sharing their opinions. Like, if you want to say, having to wear a mask at Costco is infringing my constitutional rights, I don't need to talk to you on Facebook. Like there's just there's just a limit to it for me.
Yeah, like I said, I mean, I just, it's a lot of noise. I don't deal in noise. I deal in fact, and that's why I like looking at LinkedIn. But let's, and I think it's an interesting thing that we should talk about on the network and here on the podcast about digital advertising and how that needs to evolve. I think that would be a really great topic for us, you and I, to talk about. Let's talk about Starbucks, because Starbucks is, there's a reopening in some parts of America. Not where I live in the New York tri-state area, because we're there's a lot of issues with the pandemic still. But in parts of the country, things are reopening. But I know you wanted to talk about Starbucks.
Yeah, so you haven't even had drive-throughs open. They've been literally 100% closed down.
Some drive-throughs for Starbucks are open, but not in. I live in Jersey City, and I haven't. I'm not a Starbucks person. My wife loves Starbucks, but we haven't been able to really grab a Starbucks. So I have to go make coffee every morning in our house.
Here in West Palm Beach, our Starbucks never closed. Now, weirdly, one of them is closed for renovations, which were planned beforehand and are undergoing anyway. The other one was always open for drive-through and takeout. And this speaks to the digital advantage Starbucks has. Starbucks has its app, which has about 20 million people in the US. That allows you to order, pick up, without any contact. They actually have a table outside where they put your stuff out. So they were built to operate in this environment. And in some markets, they were forced to close. But by Monday, about 85% of their stores will be reopened. That means some New York City stores will be doing walk-up, curbside pickup. Curbside pickup for me works. I place the order. I walk to about 10 foot away from the store. Somebody pokes their head out the door. I say my name. They bring the order out in a box. I take the order, and you're not even physically in the same space as the other person.
Interesting. That sounds like an adaptation that for this new normal, right? And I think so let's apply this to other businesses, especially small business, because Starbucks is a big brand, big company. It's like there's one on like every corner in Manhattan, but this adaptation sounds like something that other businesses are going to do.
Yeah, the problem is other businesses don't have the digital infrastructure to do this.
Yeah.
Starbucks, McDonald's, Dunkin' Donuts already had these apps. That is not an easy pivot. So yeah, like Einstein Brothers Bagels is open near me. It does not have a drive-through. They have an app, but it's a crummy app. But in theory, I can go on the app, order, send my son into the store, and pick up his bagels. My son goes through bagels quickly. And I could do that, but it's not a great app. They don't have a drive-through. They don't have a great method. You still have to go in the store. Not that I'm afraid to go in a store, but it's obviously, forgetting pandemic, it's easier to drive through a drive-through than it is to go into a store. So Starbucks was ahead of the curve, and people say the new normal. I think of it as the new right now.
That's true. That's true.
This is how it's going to be. We are days away, I would say, from West Palm Beach reopening. Our mayor has actually asked the governor, can we move to phase one? Phase one is restaurants with outdoor seating, 25% capacity inside, social distancing. A business like Best Buy can reopen, but with social distancing. In some markets, Best Buy is actually doing it by appointment. I wrote an article this morning that I fully expect Disney World to open in June. And I expect that to be with reservations, somewhere between 25 and 50% capacity. The guidelines say 50% issued by the state, but I don't think they're going to start at 50%.
Yeah.
Using a virtual queue to get in the lot, to get in a ride, 6-foot spacing marked out between the rides, everything wiped down, probably some UV lights, temperature checks as you go in, employees having to wear masks, you encouraged to wear a mask, dining only outside and pick up and go, maybe very little in any restaurants. And as weird as that sounds, I am super excited to get to do that. Because Jeff, even with all those limitations, how great does going to a Disney theme park that is only half full sound?
I think that's amazing. And look, if you're going to be wearing a mask, you can go to the Disney Star Wars and look like Darth Vader. I mean, I was wearing an N95 mask that was given to me, one of those, and it looks like a duck bill, right? And I'm like walking around and I feel like I'm Darth Vader. I think it's going to be amazing to go to something like that and to have, not have the crowds and not be able to have to stand in line.
Yeah, and I think, you say the new normal. I actually don't think it's crazy that when all this is over and there are no more restrictions, that Disney doesn't take maybe one day a week or certain periods, or for a premium price like they do the upcharge events at night. They might say, hey, you know what? Epcot on Tuesdays is by reservation only. It costs 50% more, but it will be half as crowded. I think there's a business model in this that might make sense, because one of the challenges Disney faces is when you go to Disney at Christmas or a school vacation, I joke that it always ends up in crying because it's a very unpleasant experience. There's a lot of waiting in line. And if you're a local and you expect it, like I go to Disney knowing, okay, I want to ride the Star Wars ride. If I have to wait 2 hours in line, to do the Millennium Falcon, and I have to get there at 7 a.m. to get on Rise of the Resistance and get a wait group, that's fine. I'm going to do that. Here's how I'll kill my time. Okay, I've got 3 hours between experiences. Fine, I'll go wait in line 90 minutes and do Midway Mania or the new Mickey and Minnie's Runaway Railway. That is fine for me as a local. That is not great for someone on vacation. And right now what they do is they sell after-hours parties. They close the park at 6. You pay an extra, in my case, like $80. I think it's more if you're not a pass holder. And you get to ride the rides with less people. It's not that many less people. Space Mountain, which might usually be 90 minutes, was like 35 minutes for my son. That's not one I do. But it is a better experience. And I think Disney's going to learn from that, and they might find new ways to operate, not because they have to, a year from now, but because they want to. I will say, Jeff, as we look towards normal, I booked today, and this is very optimistic. I booked a Vegas trip for late June. Las Vegas has come out and said, here are the guidelines. Only 3 people at a blackjack table, every other slot machine. And I looked at it and I went, geez, I wonder what the flights cost. Well, it was a minimal, less than $200 direct flight on Southwest, and I have about $700 in credit, so from canceled flights. And then I went, well, I wonder what comps they'll get. And I usually get comped at lesser hotels in the Caesars chain, so Harrah's or the Link. I got comped at Caesars Palace in a deluxe room. Talked about it with my wife, and my attitude is, I'm going to go alone. I'm going to wear a mask. Even if I play a little blackjack and eat dinner alone, just hanging out in a hotel room for 2 days sounds kind of nice.
Yeah.
So just a Saturday to Tuesday. I'm not saying I'll go. We'll see where the health situation is in late June, but you are starting to see some light at the end of the tunnel.
Yeah, I think so. I think this is going to be really interesting. I'm interested in the new business practices and adaptation. That's going to be fascinating for us to watch and talk about on the network. Dan, always a pleasure chatting with you. I like how we went from Facebook to Starbucks to Disney. Who else could do that? Only Dan Klein can do that. So, Dan, we'll talk to you later on Tuesday on the network, and have a great rest of the weekend.
I'll see you then. Thank you, Jeff.
Bye. Welcome back. We're going to talk healthcare. Joining us on the line, she is a correspondent for Business Insider, focused on the healthcare market, a really important market these days, Miss Lydia Ramsey. Hi, Lydia. How are you doing?
Good. Just hanging out here in Brooklyn.
Yeah, I think a lot of us are hanging out, including many of our listeners, really ready for things to reopen, but it is really a challenging time. So I was perusing Dispensed, and I should add that you and the team at Business Insider put together that great newsletter each and every week, and it's a Herculean effort to invoke a mythological phrase. But what's top of mind for you when you look at all those stories you all covered? What's top of mind? What's important for listeners out there?
Yeah, for sure. I think the biggest story of the week was this. On Friday, the last Friday, the FDA approved this drug called remdesivir for emergency use. So it's not a real approval, kind of just specific. And then the government kind of stepped in and was in charge of distributing the drug to hospitals. Now, we've been spending our week trying to figure out exactly how that's going. There's a lot of confusion. A lot of hospitals have been told, nope, they're not getting any more of the drug. A lot of hospitals have gotten it, and it's kind of unclear, why some have and some haven't. And so that's creating a lot of hospitals are upset. They're not really sure if they're going to get it, and it's just one of those things where it's, no good deed. One of those things. It's easier to put out a press release and say, ta-da, everyone's going to have access to this drug to treat COVID-19 patients, and then the reality feels a little bit far from it.
So the drug was approved, which is a great thing, and I think that's amazing in itself because it was probably a shorter time frame that normally would be, I guess, I'm assuming. But in terms of delivery, I know there have been challenges just in the volume, right? I mean, there's the volume of getting PPE and all these things to the respective medical facilities. Is this something that you think the federal government is going to try to streamline? Because they were able to streamline these other things over time, but it seems like that really needs to happen in ASAP.
Right. Yeah. And it's one of the things where we've seen this kind of play out time and time again with this pandemic. It's, the government comes in and tries to get involved and then, it's easier said than done, getting things like getting the right protective gear to people or getting something like a ventilator to someone. It's a lot more complicated and it's exposing a lot of, I think, the really, not redundancies, but just the complexity that exists within the government. There's a lot of different agencies and a lot of different branches, and things can get kind of lost in the weeds. So it's one of those things where it's interesting. We're hearing that, say in Massachusetts, some of the hospitals have turned over their supply of the drugs that they received to the state, and that way the state can make its own allocations as to who needs it based on how many patients people are treating, things like that, which is kind of backwards if you think about it, because it was coming from the government in the first place, went to the hospitals, and now the hospitals are saying, nope, we don't want to control this. We want it to be done appropriately, and so we'll see what happens there. I'll be keeping an eye on that in the future.
Yeah, I mean, that, I mean, I'm kind of, I guess I'm left with kind of speechless. I mean, I think it just seems like it's another area that needs to be kind of refocused and thought through. And again, we need to give people a little bit of leeway. I mean, I know that's tough, especially when people are losing their lives, but you get the expectations need to be managed too. But clearly, if there is something that can help people, you need to get it into the right hands to allocate it appropriately. And certainly, that doesn't seem to be happening at a breakneck pace. Have you heard anything in terms of the actual vaccine? I think that's something that, I know this drug is very helpful. It's gotten approved, but obviously we're all hoping for a vaccine so that when we go out, we don't, and we're infected, and we get taken care of. Any news on that front?
Yeah, so I think it's been really remarkable as a biotech reporter by background, to see things move as quickly as they are. We got into human trials already. Those are underway for at least a couple vaccines, Pfizer included, just started theirs this week. It's one of the things where I think we could get to see really meaningful, helpful results probably over the summer. So I would be keen to stay tuned to that. Once we get to let's hope that it works, right? We have to figure out if it works. We're seeing so far the first couple tests are just to make sure it's safe. And then we'll have to see whether or not it protects. And it'll be really, it's an uphill challenge, right? Like it's not just like a ta-da, we did it kind of thing that we can do with a flu vaccine. We know how to vaccinate against flu, and then it's just a matter of changing the strain. When it comes to coronavirus, we don't, the kind of family of viruses within them, we don't really have one that's been approved yet. There was some development back when there was a SARS outbreak in the early 2000s, and there was some development that happened around a MERS vaccine a couple of years back when that became a big deal. But we haven't really had an approved one. So at the back of my mind through all this is keeping in mind that we don't have a vaccine for HIV. And so there is a scenario in which we don't have a vaccine, and what do we do in the meantime? How do we, carry on with our lives as normal in the absence of it? I think those are questions we'll have to figure out as more data comes in, but it's not one of those things where we'll know in a week or two.
Yeah, I think
hopefully by September we know a lot more.
Yeah, I think you're right. And I think that's really hard for people, lay people who are not doctors and nurses and people that create this stuff, is that, we're all sitting on the sidelines, myself included, waiting, and yourself too, because you're working from home, kind of waiting for this. And, it's hard to get the data and be spoon-fed the data. But it really is a lot of this in medicine and science is trial and error. Excuse me, not error, and that just takes time, right? I mean, it just takes time to do all these things.
Absolutely.
Yeah. Well, Lydia, always a pleasure chatting with you. Thanks so much for joining us on the program, and have a wonderful weekend, and we'll talk to you again soon.
All right. Thanks so much.
Bye-bye. Welcome back, and now we're going to talk social media trends, and joining me on the line, he is the editor of the This Week in Finance newsletter, which you can, I think, now find on Saturday mornings. He'll tell you about that in a minute. Devin Banerjee is the Senior Financial Services Editor for LinkedIn as well. Devin, welcome back to the program. Great to talk with you as always.
Thanks a lot, Jeff. Always good to talk with you.
So clear it up for me. I know that This Week in Finance typically comes out on Saturday, but I think you moved it to Friday, but I think you moved it to Saturday.
Yeah, that's right. We've typically published that on Fridays. It's a roundup of the top trending conversations among finance professionals on LinkedIn every week. And we got some feedback that Friday is a bit busy for people, especially during the past 8-9 weeks when work and the markets have been a bit crazy. And Saturday, their inboxes are a bit cleaner, emptier. People are able to kind of sit back and read it and think about the conversations that we're featuring. So it is every Saturday now.
That's good. And it's funny, and it used to be the old adage in politics, if you wanted to get out bad news, you do it on a Friday. I don't think that applies anymore because the news cycles are now, it's like every few hours, but that used to be the old adage. So I'm glad that you guys heeded that and are pushing it out on Saturday. So let's jump right in. What's top of mind for you this week?
Yeah, absolutely, Jeff. A lot of really thought-provoking conversations this week. I think we're in this phase of the crisis where people have kind of stemmed the bleeding and the issues and are now thinking kind of long-term and into the future about how work will be reshaped, how to return to work potentially. And so a couple of those I'm going to highlight. But I'm going to start, we're recording this on Friday, full disclosure, and it is Jobs Day, the first Friday of the month of May. So there's numbers coming out, a lot of conversation around it. The unemployment rate in the U.S. now 14.7%. That's up from 4.4% in March. So this number represents about 20.5 million jobs lost in the country, basically all of the jobs gained since the Great Recession of 2008, 2009. The unemployment rate, that 14.7%, unfortunately is a new record since World War II. So look, we knew this was going to be bad, but the numbers are out. Now we know, of course, more records being set, bad records, of course. But diving in a little bit deeper, we at LinkedIn have created a metric called the LinkedIn hiring rate. And that's where we're looking at among our almost 700 million users and hundreds of millions of them in the U.S., looking at changes across industries and sub-geographies of the U.S. So a couple of takeaways there. We released some data this week. Some bright spots, I'll focus on that. So one is the hardware and networking industry. So these are, think, semiconductor makers, internet service providers, wireless companies, et cetera. That was a real bright spot. We actually saw hiring rise in that sector in April, about 2.3%. Some other sectors that saw a dip but still fared better than average included public safety, agriculture, and healthcare. And, if you think about these areas are areas that are basically essential, bedrock societal needs, especially right now. If you think about public safety, all branches of the military continued to hire in April. If you think about food and agriculture, that remains, of course, in demand. Some of the active companies we saw there included, leading makers of farming chemicals and seeds, very much in demand. And of course, with networking and wireless companies, internet is effectively now a necessity for everyone working from home, staying connected with family and colleagues, and also entertainment now. And also in that data we released in terms of major metropolitan areas. Boston fared basically the best among all of the major cities in the U.S., and we think that's in part to its exposure to some of those resilient industries like healthcare, education, and technology.
Interesting. And you bring up the public sector, and I've been reading about well, we all know about the cash-strapped states and municipalities with relates to their pensions, but I've also been reading that some of these municipalities and local governments may actually have to have layoffs. And I don't know if that, what that looks like, but I would think, Devin, that's really impactful if you can't, for example, have law enforcement or firefighters or emergency personnel, or even just people doing the administrative work to process, licenses, right? That's a big problem.
Yeah, that's actually a great point and a great forward-looking area to focus on because, if you think about the public sector, demand for those services does not really correlate exactly with revenue and income like a traditional capitalist private business would. So, income and revenue for the public sector is coming from taxes and other kinds of levies and fees, and those correlate with all of these other bad statistics we're seeing in terms of, the employment rate and people's personal income and small business income, all of that. So that's going to be really interesting to watch. That's a great point, Jeff.
Yep.
Another really interesting area to watch where we saw some conversation around this week is insurance. It's kind of an uncharted territory right now with businesses attempting to leverage their insurance as they've been hit. So business interruption insurance is really in the spotlight. And most of these policies, business owners are learning, only cover, physical damage to a property, not the loss of use of their businesses or their properties. And so a lot of lawsuits are starting to fly. And so, as I said, a lot of focus on this. The president, Donald Trump, actually weighed in saying he would like to see the insurance companies pay if they need to pay. He said, you have people that have never, filed claims on business interruption insurance, and they've been paying their premiums for years for the privilege of it, and now they need it. So we'll see if his words carry some weight there. But a lot of nuances, as I said, insurance is regulated at the state level, not the federal level. So state by state, underwriting rules and policies are going to be different. And we've already seen some kind of high-profile winners and losers on this topic. South by Southwest, the big cultural and film festival in March, learned that it did not have the right insurance policy to file a claim. One story that I found really interesting, it's about a month or two old now, but Wimbledon, the Grand Slam tennis tournament, has been paying premiums on exactly the right kind of pandemic insurance for 17 years. It's paid about $35 million in premiums, and it was able to now, reap, based on its claim, about $140 million on that. So really, as I said, putting a spotlight on the nuanced world of insurance and what type of insurance is going to be needed going forward for business owners, and whether insurance companies will need to innovate to write some of these nuances into their policies or create new kinds of policies.
Yeah, I think that you're going to need businesses are going to need a whole new industry of lawyers to write these. I mean, that's really what happens, right? The contract is always based on the previous contract. And, you see that with some of these disasters. We had Hurricane Katrina. You had people look at flood insurance and what that looks like and what the rates would be as a result of, being in a low flood zone, a low incline area. So, I mean, I guess it's just a natural part of business. But I really find it really it's kind of hard if you're a small business owner and you had insurance and you're paying these premiums, and now you can't even get anything back. I think that's something that these organizations, I think for the best of everybody, really need to think about what they're doing, because that just is a public relations nightmare, and it's not a good thing in general. So.
Yeah, no, absolutely. It necessitates reading the fine print, and not all of us do that. I think we're all to blame for not doing that in our personal lives, and for a small business owner, starting up with a million things on his or her mind, reading the pages and pages of their insurance policy, now we know is necessary, but it's hard to do in the moment. One last topic I'm going to mention, Jeff, if I can squeeze it in, because you and I love talking about this, I think. But again, a big debate over shareholder primacy. So it's been earnings season the past few weeks, which is a typical time for public companies, to declare their quarterly dividends. And the public and investors, a lot of people, are hearing some of these dividend policies and thinking, this is cash raining down on shareholders, but why are these companies simultaneously cutting to the bone and laying off workforces? So, of course, there are opinions on all ends of the spectrum on this topic, but we had a really kind of nuanced and deep, I think, conversation featured on this topic on the platform. Some, people saying, Matt Krantz weighing in, saying, be careful what you ask for. Retirees and pensioners and even workers themselves rely on investment income. They benefit from dividends as well. Rainier saying, look, the challenge is these companies have commitments to both parties, right? Investors have paid into the health of the company. They put their capital at risk. At the same time, employees are, putting in their blood, sweat, and tears, or sweat equity. And so, companies are balancing their obligations to both. Lori Williamson said, if I have stock in your company and find out you're tossing people into the street, I'm selling it. So people on all ends of the spectrum. I candidly don't even know where my opinion falls on this topic. It's kind of an unprecedented time right now, but fascinating, nuanced conversation there.
Yeah, I think people are going to be looking very closely at how organizations, whether it's government, state and local government, federal government, and how organizations respond during this pandemic, and are going to judge them based on their experiences. So I think there's a lot of things to consider from all sides. So, and Devin, I before we go, I heard some birds chirping in the background, and that's amazing. I always think you're a very optimistic person, but now I even have a higher regard, because the birds are all coming to you and they're singing, and that's a great way to end our segment.
Yeah, it's just a beautiful season right now in San Francisco, and I take my calls in our backyard, and the birds are really keeping me optimistic, and I hope maybe this warm weather and optimism and the birds outside help everybody right now.
Yeah, absolutely. And I'm just playing with you. Devin, always pleasure chatting with you, and people should tune in to the network, of course, but also when Devin appears, but also subscribe to the This Week in Finance newsletter, which now comes out on Saturdays. Devin, take care. Have a great weekend, and we'll talk to you soon.
Sounds good, Jeff. Take care. Bye.
Welcome back, and now we're going to switch gears, talk a little personal finance, or a lot personal finance. And on the line, she is the personal finance reporter with the Motley Fool, Miss Mari Backman. Hi, Mar. How are you?
I'm doing okay, Jeff. How are you?
I'm doing okay, and I think just take a look at the article you just sent me. I know we're going to talk about something else, but how to work from home with your spouse without hating each other. I love this. I think it's cute, but some really good lessons there to be learned.
Yeah, exactly. A lot of people are finding that it's not just managing work and homeschooling. That's the challenge. It's also coexisting with a spouse you're not necessarily used to working next to. That's probably something we could talk about at length another time. But, Jeff, I want to talk about the way coronavirus has impacted retirement accounts, because
Sure.
I think that's something that's a big concern for a lot of people right now.
Mm-hmm.
So Fidelity actually put out some information on this in late April. And according to Fidelity, the average 401k balance dropped about 19%, which is the equivalent of about $21,000 between the final quarter of 2019 and the first quarter of 2020. So basically in 3 months, you're looking at a 19% or roughly $21,000 drop. And IRAs didn't do all that much better. The average IRA balance during that time saw a 14% decline, or about $16,500. So those are some scary numbers to
absolutely.
look at.
Very scary.
Right. I mean, and a lot of people don't necessarily check their IRA or 401k obsessively, but when you get either your monthly or your quarterly statement in the mail, or you get it emailed to you and it's right there in front of your face, and you see those numbers in front of you, it's really easy to panic. So I just want to talk about why people shouldn't panic and what people should do instead. So first of all, the reason not to panic, it's the same reason you shouldn't panic even if stocks in a regular old brokerage account that you have lose value. The only way you actually lose money is if you sell investments at a loss. Now, a lot of people who have an IRA or a 401k are not planning to touch that money for years. Right. I mean, for some people, we're talking 20, 30, 40 years. Even people who are a little bit older and are starting to plan out their retirement, chances are, someone in his or her late 50s, early 60s still isn't touching that money for a number of years. So the thing is, as long as you're not touching it, that loss is by no means locked in. It's what they call a loss on paper. These days, I think we should call it a loss on screen because a lot of people access their, statements on a computer rather than, wait to get it in the mail. So whether you want to call it a loss on paper or a loss on screen, the fact of the matter is it's not an actual loss until you take action. So the best thing to do is to actually do nothing.
Yeah. Well, I think, look, if you can do that, that's great, right, Maury? I mean, I think you're right. This is a long-term investment, and I say long-term. This is something that you need to stretch out and not take, and realizing that there are going to be ups and downs in the market. This is a very challenging time for so many Americans. Any thoughts, Maury, about from Fidelity or from yourself in terms of people having access to some of this money through the CARES Act? Because I have to think that plan sponsors, employers liberalize some of their payments to coordinate with the CARES Act, the higher loan amounts, the withdrawal, the failure to have a penalty for taking an early withdrawal.
Right.
Any thoughts about that from Fidelity or yourself in terms of?
I have thoughts from myself. So the CARES Act does allow for up to $100,000 to be withdrawn penalty-free from an IRA or 401k if you need that money due to the ongoing crisis. And 401k loan limits have doubled because of the CARES Act. So obviously that's a good thing in theory because it gives people who are really desperate a little bit more leeway for getting money. The problem, of course, is twofold. Number one, if you take a withdrawal from your retirement plan right now, you may be locking in some of those losses we just talked about, which you don't want to do. And then, of course, the other side of it is that, any money you take out today is money that won't be there for you in retirement when you really won't have a paycheck for a very long time. I mean, unless you're planning to hold down a job in retirement, but a lot of people aren't. Retirement means, no more work. And people, frankly, have earned that. A lot of people get to their mid-late 60s and say, all right, I've worked for 35, 40, 45 years. I've had enough. So, the money that you remove today is money you won't have then. And it's not just the principal sum you're removing that you won't have in retirement. It's, when you think about it, the money in your IRA or 401k, why does your balance fluctuate? Because you invest that money. You have the opportunity to grow that money. So if you take a $10,000 withdrawal today, but you're not retiring for 30 years, you may find that, 3 decades from now, you're actually short like $50,000, $60,000, $70,000 when you account for the fact that you could have put that $10,000 into, stocks or something with a pretty decent rate of return, and you could have grown it into a larger sum over time. So, even though the CARES Act does offer this leeway, I would caution against it. I would caution against taking a withdrawal from a retirement plan unless you really, really need to. But I'm talking, you want to exhaust all other options before you do that. You want to see if you can maybe borrow against your home if you have some equity in it. If you have an emergency fund, definitely use that first. That's what it's there for. In some cases, a personal loan may be a viable option. It really depends on how strong your credit is and what what interest rate you can qualify for on it. I would just say, proceed with caution, both because you don't want to, in general, it's not a good idea to take an early retirement plan withdrawal, but especially now at a time when we just saw just how much of a decline most plan, the average plan has seen. It's really not the time to be tapping those funds if you can avoid it.
Yeah, well, I think those are really good. That's a really good reminder, really good lessons. And I know it's tough out there for people, right? They're very emotional We're all emotionally attached. We get worried. We get scared. I know I go through that personally myself. Just, how am I going to make it to the next day, right? And you have to resist that urge. You kind of have to do your best mentally to separate the emotional aspects of this with the logical aspects. And Mari, that is really challenging for people.
Yeah, no, it definitely is because, it's funny. It's easy to sit here and say, well, don't do this, do that instead. But at the same time, when you're operating in panic mode, you don't always think rationally. And I've definitely been in a situation myself where I've done some foolish things financially because I was letting fear dictate my decisions. Yeah. I totally get that. I guess the only thing I would say to that is, okay, maybe one thing you can do is, if you really are in a bad spot and you're thinking of tapping, your 401k or IRA, really just make a list of other income sources before you go that route. And if you're sitting there staring at your, lower balance in either account, whatever account you have, just remember that you're probably not using that money for a while. And the only thing you really need to do is just not do anything. That's it. If you're really worried about, oh my gosh, well, I'm retiring in 2-3 years from now, if you want to kind of be proactive in that regard, it wouldn't hurt to maybe, sit down, crunch some numbers, maybe rethink your retirement plans if you're really close to that milestone. We don't know how long recovery is going to take. We don't know how long the COVID-19 crisis is going to drag out. Right now, the economy is in a really bad place. Unemployment is at its worst level since the Great Depression. So right now, it's not a great time. And if retirement is really near, then I'd say you may want to start rethinking some plans. But if you're, at least like a half decade away from retirement, I would just say right now, do yourself a favor, actually. Just don't check your retirement plan balance. Just don't check it. It's not, it's not really going to do you much good to see those numbers jumping all over the place, especially in a downward direction. So don't torture yourself.
Yeah, so definitely good advice. And also, if you want a distraction, check out Mari's article, which I'm going to post in Monday's Morning Post, so tomorrow's Morning Post, about working with your spouse and how not to hate each other at the end of it. Mari, always a pleasure chatting with you. Have a great rest of the weekend, and we'll talk to you very soon.
Thanks, Jeff. Stay safe.
Bye. Welcome back, and we're going to talk travel today, which I'm really excited about because, Jacob Passy, who's on next, he covers not only real estate, normally does that on the program, but he also covers travel. Really a great reporter. Jacob, always a pleasure chatting with you.
Glad to be here.
Oh, I forgot to mention that you're affiliated with MarketWatch. My apologies to you. My apologies to MarketWatch. So, Jacob, I guess I'm just, so excited that we're talking about travel, hoping that we can get back to eventually leaving our homes and going on those vacations and relaxing. So what's top of mind for you this week in terms of the travel industry?
Yeah, so some big news this week, was from Disney. So as a lot of listeners may know, pretty much, every Disney park around the world has closed because of the coronavirus pandemic. But Disney announced this week that their theme park in Shanghai Disneyland, will reopen on May 11th. So that the Shanghai Disneyland and Hong Kong Disneyland both closed back in January because of the coronavirus, which makes sense. Obviously, it hit in China before it came, to the U.S. and the rest of the world. So the reopening, they provided details on what to, how it will work in Shanghai, and that kind of gives us a little bit of a clue of what to expect for Disneyland in California and Walt Disney World in Florida.
Wow. Okay. So I'm excited. I'm sure that there are social distancing protocols and things that, keeping your, I don't know, keep your distance on like a Space Mountain type thing or It's a Small World. But what can you tell us there?
Yeah, so I talked to some experts about, what you can expect when folks can start going back to theme parks, and a lot of what I talk about now, while I focused my story on Disney, this will probably be true across, all sorts of theme parks, your Six Flags, your Universal Studios, whatever theme park you attend, you'll probably see some of this. So, first off, Shanghai Disneyland is requiring folks to wear masks pretty much all the time. You're allowed to take masks off for eating, but otherwise they expect you to keep a mask on at all times. Disney, I should clarify, Disney has not, announced anything official about how it'll work here in the U.S., but you could probably expect something similar. Disney actually announced this week as well that Disney Springs, which is the shopping district that they have at Walt Disney World, will be reopening later this month, partially, and they are requiring folks to wear masks when they go in stores and restaurants in Disney Springs when it reopens. So, I think, when you're packing your bags, definitely pack a few different masks, to have with you if you're going to travel to Disney, in the next year or so. And then social distancing is definitely the name of the game. It's not just, park guests who are, being asked to keep their distance and keep masks on. The employees are doing the same thing. So, unfortunately for the little kids, you're not going to get to, hug a princess or anything like that. Interestingly, Disney said that, all their employees at Shanghai Disneyland will be wearing masks with the exception of what they call face characters. So it's like the princesses, the princes, Mary Poppins, those types of characters. Like those actors, they usually, they're not in the full body costume with the big head on and stuff like that. They're usually kind of dressed like a normal person. And so I think Disney doesn't want to ruin the illusion of things. So they are not going to wear masks, but they're going to be kept a large distance from guests. So, a lot of the popular meet and greets and stuff like that may not come back.
Yeah.
And then in terms of, rides, you can probably expect things to be quite a bit different, starting from how the lining up works. So at Shanghai Disneyland, they've, put stickers on the ground basically saying where you can stand in the line to maintain, the 6 feet, 2 meters, 3 meters of distance between people. But folks I talked to who are travel experts, they suggested it could go further than that. On a ride like Pirates of the Caribbean, where it's, a boat with multiple rows, they may limit it to, one party per boat, or they might do it where, a party sits in the front row of the boat and a party sits in the back row of the boat, and the 2 or 3 rows in the middle are kept empty to give distance between, parties of unrelated people. So that's something you can expect. And that means that, the whole process of getting on a ride might take longer. And because of that, Disney could theoretically, here in the States, do away with lines almost entirely. So if you've been to Disney World or Disneyland, you know about fast passes. Those are, tickets that you can get basically at each of the rides or through your phone, depending on the park you're going to. And it's basically you're reserving a time to come back and stand on line. So it's basically like a virtual line. So you're not waiting 2 hours in the line in person. You're, getting a ticket to come back later. Disney theoretically could make it so all of their rides and attractions work that way so that they reduce how many people are standing in line at any given time. So, while you may not have to wait in lines the same way, it does mean, though, that, the actual wait could be longer because, they want to pace everything and reduce how many people are on the attraction at a given time. Another big change is 3D glasses. The Orlando Sentinel made a report this week where they noted that attractions with 3D glasses could not reopen or could be, modified to be a 2D experience because, while those glasses are sanitized in between guests, there's probably an extent to which people are going to be a little bit nervous about, reaching into a pile of glasses and getting one for themselves. So, those are some of the changes you can expect.
Wow. I mean, that's interesting. I mean, Jacob, do you think that just because of timing and different places in the United States opening up that the actual volume will be down? So maybe it's a really good time because, when you go to Disney, traditionally it is like jam-packed with people and good luck getting on a ride. I mean, do you think that potentially with reopenings happening sporadically and travel kind of re-engaging sporadically that you could see is actually a better opportunity to go to Disney and take advantage of some of those rides.
Yeah. So I should have mentioned this. So the one other big change that's going to happen is, in Shanghai Disneyland, they're not just reopening business as usual. The capacity is being limited quite substantially. So it was a rare occurrence where Disney actually acknowledged the capacity of the park. They don't usually do that. And so they admitted this week that Shanghai Disneyland can hold about 80,000 people on a normal day.
Mm-hmm.
And the Chinese government had restricted that to about 30% of its usual capacity. So they limited it to roughly 24,000 people. And Disney said they're limiting that even further on their own. They're putting in even, more restraints. And so, to go to Shanghai Disneyland, you have to make a reservation on a specific day. You can't just show up at the gates and expect to get in. You actually have to have a ticket to get in. On a specific day, and here in the States, that's already how it works to some extent, although there's an extent to which you could, change your plans here and there, or if you're an annual pass holder, you're used to, just being able to come and show up. That's probably going to change for the near future. You're probably going to have, even if you're an annual pass holder at Disneyland or Walt Disney World, you'll probably have to make a reservation to be able to guarantee to get into a park on a given day. And Disney is definitely, they haven't announced this yet, but it's hard to imagine that they will allow the parks to reopen at their normal capacity. They will probably restrict it, at least to see how things go and how the social distancing protocols work and how they can manage the crowds. But Disney doesn't expect low demand. They expect there's going to be quite a bit of pent-up demand. That's already been seen in Shanghai. The tickets already went on sale for the next couple weeks, and they pretty much sold out immediately. And like you said, I think there are a lot of people out there, because the crowds will actually be smaller by requirement, that can make for a more pleasant experience if you're willing to risk, going to a theme park. So there's definitely going to be a lot of people who are probably still going to be too nervous to go to Disneyland or Disney World, and that makes sense. You don't want to get sick because you travel, and I think there's a lot of fear out there, and it's not it's quite understandable. It's not weird to be nervous about that. But for the folks who aren't nervous about it, there probably are going to Disney. When I asked them about promotions or discounts, they pointed me to what their new CEO Bob Chapek said during their earnings this week, and he said that they expect demand to be quite high. So he expects that the park will be at capacity of whatever capacity they set. And so, I think you're exactly right. There are probably going to be a lot of people who are interested in going because by virtue of the limitations that will be in effect, the crowds will be much smaller, which could theoretically make for a better experience, although it will be a weird experience. I mean, a lot of things are not going to reopen. Shows and certain restaurants may not reopen. The character dining kind of experiences, it's unclear whether those will be allowed to happen. Buffets, we don't know if the buffet restaurants, which are some of the more popular ones at Disney World and Disneyland, we don't know if those will be allowed to operate like they used to. So there's a lot of question marks in the air. And Disney's still figuring it all out.
Yeah, it sounds like it, but at least it's progress, and it's really, just any little bit of incremental change to get us back to some level of being out of the home sounds like a good thing to me. Jacob, always a pleasure chatting with you, whether it's real estate, travel, or just to say hello. We appreciate it. Have a great weekend, and we'll talk to you again very soon.
Talk soon. Take care.
Welcome back. Now we're going to talk retirement, all things retirement, and I'm very pleased to bring in someone who is so passionate about the topic of retirement and savings. Alessandra Milito is the retirement reporter for Market Watch. Allie, great to have you back on the program. How's everything going?
Pretty good. How are you?
Doing okay. It's a rainy rainy Friday as we're recording this, and it kind of bums me out, but I'm still trying to stay positive.
Good, as you should.
Yeah, as we should. So, what's top of mind this week on the topic of retirement? All things around that great topic.
Yeah, so a couple of things. This week I really focused more on nursing homes, but happy stories about nursing homes. As part of my coverage in the retirement section, I typically write about nursing homes, assisted living facilities, and other long-term care centers. And they've been very sad stories lately.
Yep.
what with about a fifth of all U.S. coronavirus deaths linked to nursing homes. But I tried to switch it up a little bit, and I brought some happiness to the beat. So I spoke with some centers, whether they be nursing homes or assisted living facilities, about what they're doing with the residents to like keep everything upbeat, especially because they've all restricted access to visitors, and that means no family or friend visits. And they had some really fun stuff. So like on social media, I saw on Instagram, they were posting pictures of residents with signs that said like, hey family, I'm doing well, don't worry about me, we'll get through this. And like, they're trying to bring happiness and some, positivity to their families, because their families are the ones who are worried about them.
Mm-hmm.
And then there are also like activities in the hallways. They're doing like exercise or paint hour and things like that. And they're doing concerts that go around the grounds of the facilities. So it's been really sweet. And then there's an organization that I spoke to for a separate story about, it's called Love for the Elderly. And they send letters to nursing homes, assisted living facilities, and other senior-focused areas to, kind of keep them engaged. Anybody can write a letter. They have to be handwritten, which is very nice and old-fashioned and old-timey. And then they send them in bulk to any facility that requests them. And they said that in the last month they had almost like 12,000 letters that they sent out to 300 centers. So that was fun.
Yeah, these are our most vulnerable people in this pandemic, and it's nice to see. I applaud you, and I love the fact that you focus on so many different aspects of retirement, and you focus on this. And it's good to see, right? I mean, to me, it just makes me feel optimistic. I was a little down when we started talking just because of the weather, but it kind of is uplifting. And I think we need more of these uplifting stories because people are being innovative in how they're interacting, not interacting, but it could be interacting, but interacting with each other. And how do you stay in touch with a loved one, someone in one of these facilities during this very difficult time?
Yeah, I mean, the stories that I was writing prior to this, they were pretty sad. I listen in on nursing home and assisted living facility association calls, and they talk about like what they're doing to restrict access and the resources that they are lacking and what they need, and how many people have passed away or how many people are sick. And there's this correlation between if you reopen a state and that community ends up having an outbreak, it's more likely to infiltrate the nursing home, and that's detrimental. So they've been really sad stories. I've spoken with family members and loved ones who, are terrified every day. They wake up and they look for a text message from their parent or spouse or grandmother to make sure that they're okay and that everything is fine for the day. It's just really heartbreaking. I'm on the phone and people are crying with me over these sorts of things, and it's devastating. So. Yeah. I wanted to bring a little light to this situation because thankfully there are people out there who are, there are staff members, there are activity directors, and they play a really important role right now. This is the demographic that is most at risk of complications or worse from the coronavirus. Yeah. Older people as well as immunocompromised or those who have chronic diseases. Mm-hmm. And they're also the most vulnerable as far as like loneliness goes or depression. So, if you restrict access to them from their like loved ones, that could be mentally, breaking. Yeah. So it was nice to see and talk with people who are, engaging, and they're keeping themselves connected to this group.
Yeah. Nice. Yeah, absolutely. And I can tell you personally, there's not a day goes by that I don't miss my grandparents. I mean, they've been gone for quite some time, but I do miss my interactions with them. And I talk to my parents every day, and my stepmother and stepfather. But I got to tell you, I miss my grandparents, and I wish I could have them back forever. But that's not part of life. So I love the fact that you touch on this and kind of highlight this, and I think we need to do more outreach and more support. And people should certainly check out Allie's article. And Allie, if you send it to me, I will definitely post it in the meeting notes, in the podcast notes, and you can go out and try to reach out to some of these organizations as listeners and try to support them. Allie, great story. Makes me feel amazing, and I really appreciate you coming on the program today. We look forward to having you back again next week.
Great. Talk to you soon.
Bye-bye.
One, two, bring it to the phone. Snoop Doggy Dogg and Dr. Dre is at the door, ready to make an entrance. So back on this.
Welcome back, and now it's time to end our show. We always do with a visit from the Legal Eagles, and today we are one Eagle less, but joining me on the line is Kevin Walsh. He is a principal with Groom Law Group, an employee benefits law firm based in Washington, D.C. Hi, Kevin. How are you doing?
Hi, Jeff. I'm doing well. I've been enjoying the springtime weather, but this weekend, I mean, it's just brutally cold on the East Coast.
Yeah, and rain. They're
Yep.
not good. Well, rain
Yep.
where I am. I don't know if it's raining in Washington, D.C., but in New York area right now, it's raining and gray. So I'm a little disappointed.
Yeah, this weekend we're supposed to be getting like 30s and possibly a frost, which I don't know. I'm gardening to stay sane with the lockdown, and I'm worried I'm going to lose my tomatoes.
Well, I'm always worried I'm going to lose my tomatoes too, buddy, and my squash. But look, there's a lot going on apparently on Capitol Hill, and you gentlemen, you and David, break it down for us each and every week. What's top of mind for you and the team at Groom Law this week?
So this week there's kind of two small updates instead of one really big update, but both of these are kind of big ticket items. So the first update is, everyone's been talking about pooled employer plans, PEPs, and the idea of kind of employers being able to band together and join a plan that's sponsored by a service provider. And kind of we've been looking longingly at DOL to get guidance on it. We're hoping the first round of guidance would have things like what an entity has to do to register so they can begin designing their product. Mm-hmm. And just this past week, DOL sent a request for information over to OMB, kind of signaling that the release of kind of questions from the Department for the regulated community are imminent. So I think we can expect to see a fair amount of kind of questions about, do they need to have exemptions for this? How should they interpret the statutory language? And this is kind of exciting. On the one hand, it would have been nice if this was a proposed rule because it would signal they're further along in the process. But going through an RFI first signals that the department's really interested in hearing what people have to say before they get too far down the path of designing this. So if you're a plan sponsor and you're considering kind of a pooled employer plan, it might be worth commenting as a way to have it designed in a way that you like. And if you're a service provider that's thinking about sponsoring a PEP, then you're going to want to pay attention to this and possibly put in comments as well to figure out how to make the rules most workable for what you're planning.
Yeah, and I think that's great, Kevin. I just want to jump in real quick just to make a comment that I think it just shows the dexterity or the agility. I mean, the Department of Labor can do several things, right? I mean, we've talked about COVID and IRS too, because last week you told me I left them out, didn't mean to, and other regulatory agencies, how they can walk and chew gum at the same time. So this is a great sign and kind of gets us back on that Secure Act goal that we had talked about at the end of the year.
Oh, yeah. So, I mean, I think DOL has probably been as busy as they've been in the last 4 years and the last 6 weeks. And it's incredible how much they've managed to at least get over to OMB so far. And I think we expect more from them. The second thing I want to talk about this week is kind of pivoting back to the walking chewing bubblegum, the other topic that everyone wants to talk about all the time, which is, COVID-19 and kind of different relief packages that Congress can do. And we did a week-long pod in our, how do you call that, a mini season? What would you call that we did? What would you call what we did, Jeff?
I said, okay, a special event. I like that, a pod in our. Okay, that's interesting. I like that. I would say like a special series on the CARES Act and CARES Act relief.
So we did a special series on the CARES Act relief, and as Jeff so eloquently put it,
I'm not eloquent. Ask my wife. Sorry, go ahead.
In all likelihood, by the end of May, we might have another opportunity because next week it looks like Congress is going to begin negotiating kind of the next round of relief packages. And this round, it already looks like it's going to be a little more partisan. I think there's a lot of hope that we'll see things in the retirement space. There's been discussions of multi-employer funding relief. There's been talk about single employer pension kind of contribution smoothing. And, those things could be included. But right now, kind of the key issues seem to be, on the Democrat side of the aisle, they want to provide a fair amount of relief for state and local governments that have been on the front lines of the crisis. And, some of them may not have been in great financial footing coming into the corona crisis. Republicans, on the other hand, it seems like they're more focused on kind of getting the economy reopened quickly. And in doing that, what they're looking to do is provide litigation relief for employers who kind of rush back to work. So they want to provide limits on the liability that an employer would have for reopening because they're concerned that employers might stay closed longer. The two sides, the Democrats don't seem particularly interested in what the Republicans want. The Republicans don't seem particularly interested in what the Democrats want.
That's a shock.
And the president has signaled that he wants to have payroll tax cuts. So, and he's got a third position. The further we get into this crisis and the closer we get to the election, it becomes more and more likely that we're going to see kind of partisan legislation. I wouldn't be surprised if the Democrats release one version of the bill, Republicans release another version of the bill. They serve primarily as messaging pieces for a couple of weeks before real negotiations begin. But I think people are generally hopeful that we'll have another round of relief because, you look at the jobs report this week, and
get me started
it's
on that.
almost 15% of Americans are out of work.
Yeah, it's horrible. That's horrific, right? And not to get back on my soapbox from earlier in the show, but not all of the stimulus relief found its way to all the small businesses, right? So I think there's definitely some disconnect. Sorry, I didn't mean to interject, Kevin. Go ahead.
No, I think if we look at kind of the post-war world, because we had a Victory in Europe Day on Friday, unemployment is high as it's been since the end of World War II. So I think there's probably some hope that we would see additional relief and it would be crafted well to provide, the most stimulus for the buck.
Yeah, absolutely. Well, look, I guess it's a good sign that they're talking. It's just a shame that it takes so long. This is my personal opinion. It takes so long for things to kind of get executed because there are people who are in dire need, small business owners, personal citizens, just individuals. So hopefully things can move along very quickly and get to a place that we need to be. Well, Kevin, we're going to leave it.
No, it's.
Oh, go ahead. I'm sorry.
I think it's. It's tough. I think Congress is trying to get stuff done. On the other hand, I think the CBO put out a report on Friday saying that in April the federal government normally runs about $160 billion surplus, and this April it ran about a $950 billion deficit.
Oy. That's not great
I think
news,
the key
Kevin.
here is that whatever they craft, they design it well. And in a hurry.
Yeah, absolutely. Well, Kevin, always a pleasure chatting with you. And we miss David, but it's always nice to speak to you, each of you, one-on-one. So every once in a while. But look forward to having you both back next week and catching up again. Take care. Have a great weekend.
Thanks, Jeff. You too. Bye.
And that wraps up this episode of the BRN Sunday podcast. Hope you had a great time. Hope we were entertaining as well as educational. We always shoot for that on the program, and I think we hit the mark, don't we? If not, let us know. You can always send me an email or look me up on LinkedIn or some of the other social media platforms and let me know. And we're back again tomorrow morning on BRN AM. I'm going to be joined by Capital Wealth Strategies founder and chief investment officer, Kevin Simpson. He's going to weigh in on the financial crisis and also some things that he's advising to clients. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.